Hello children, we were going through the different adjustments to be done while change in profit sharing ratio. In the last module, we have seen revaluation of assets and reassessment of liabilities. Now we are discussing the second method of revaluation of assets and liabilities, in which the revised values or the changed values of assets and liabilities are not recorded in the books of accounts. Okay, so let's see how to do this one. When revised values of assets and liabilities are not to be recorded. So, profit or loss on revaluation of assets and reassessment of liabilities is adjusted through partners' capital accounts by passing an adjustment entry. Okay, so assets and liabilities will remain in the books of accounts as their book value. We are not going to record their changed values in the books of accounts, but we are doing one adjustment entry between the partners' capital account. Okay, so let's see how to do the adjustment. First one, calculation of the net effect of revaluation. Say for example, if any asset value is increasing, you need to add that one, and if any liability value decreasing, that also you need to add. These two are our profits. Then decrease in value of asset is our loss, then increase in value of liabilities, that is also our loss. So we need to deduct these two. In the next slide I will explain that once again. So we have to find out the net effect of revaluation. Now then, to find the sacrificed or gained profit share of each partner. Okay, so who all are the partners, who is gaining, who is sacrificing, how much is the gained share, how much is the sacrificed share, that you have to find out by the equation sacrificing ratio is equal to old minus new. And if you are getting a positive figure as the answer, that is a sacrifice, and if you are getting a negative figure, it will be a gain. Sacrificing ratio is equal to old minus new if you put in that equation. Okay, now step 3, calculation of proportionate amount of net amount of revaluation. Net amount of revaluation we got in the first step. That one's proportionate amount you have to find out here. Then say for example, one partner is gaining 1/6 share and another partner is sacrificing 1/6 share, and net effect of revaluation is 60,000. So 1/6, 10,000 is the amount to be adjusted between partners. So for gaining partners, gained profit share into net effect of revaluation. Here in this case it is 10,000. And for sacrificing partners, sacrificed profit share into net effect of revaluation. So one partner is gained 1/6 and another partner lose 1/6. So it is here in this case 10,000 each. And the step number 4, we need to pass the adjustment entry. If it is a gain, so here we discussed it is net profit. So gaining partners capital account debtor to sacrificing partners capital account. If it is a gain, journal entry is gaining partners capital or current account debtor to sacrificing partners capital or current account. Okay, and if it is a loss, entry will be reversed. Sacrificing partners capital account debtor to gaining partners capital or current account. Okay, so this is the second method of adjusting revaluation of assets and liabilities. In this case, we will be keeping all our assets and liabilities in their book value only. We are not going to change the price. We are not going to show the changed value of assets and liabilities. So this is how you have to do the adjustment. Okay, now I will explain how to do the calculation of net effect of revaluation once again for your better understanding. Now let's see how to find the net effect of revaluation. Some assets value may increase, some asset value may decrease, just like that. Liabilities also, it may increase or decrease. So how to find out the net effect of revaluation and how to find out the amount to be adjusted between partners while changing profit sharing ratio. Now we are going to see that one. Okay, so first increase in value of asset. If any assets value increasing, we used to write it on the credit side of revaluation account. Okay, because it is a profit. That amount we need to add. We need to take that one. Then along with that one, decrease in value of liability. Liability value decreasing. That is also our profit. We used to write that one on the credit side of revaluation account. So that one we need to add along with the first one. Then decrease in value of asset. Any assets values decreasing. Is it profit or loss? It's a loss. So debit balance, revaluation account, debit balance. So that one is a negative figure. You need to deduct that one. Then increase in amount of liabilities, that is also loss, is it? So that comes debit side of revaluation account, negative balance. And net effect of revaluation, take the total of these two. From this one you need to deduct this one. You will get the net effect of revaluation. This is the amount to be adjusted between partners. Okay, fine. Hope Hope it is clear. Now let's do one question. See, this is the question. X, Y and Z share profits 5:3:2. Desire to share future profits 4:3:3 with effect from 1st April 2019. And these are the assets and liabilities. We need to pass the adjustment entry. Okay. So let's do, first we need to find out the calculation of net profit on revaluation. So some assets are increasing, some decreasing, liabilities values also increasing, decreasing. We need to find out the net effect. What is the amount to be adjusted between partners? So we are doing like this. First, what is the first thing? Investment book value, it is 20,000 and revised value 22,000. Investment 22,000 book value, revised value 25,000. So it is an asset. Asset value is increasing. So there is a profit of 3,000. Okay. So increase in investment 3,000 credit balance. Then plant and machinery 25,000. Here it is 25,000. Sorry, 20,000. Plant and machinery, it is an asset. Asset value is decreasing by 5,000. So it is a loss. So debit balance, revaluation account, debit balance. Now land and building. Land and building, it was 40,000. Now it is 50,000. That is also an asset. Asset value is increasing. So it is a profit. Revaluation account, credit side. Okay. Now outstanding expense. Outstanding expense is a liability. Liability is increasing. So it is a loss. So debit balance on debit side of revaluation account we should write. Increase in outstanding expense 400 debit. Now sundry debtors. Sundry debtors, it is an asset. Asset value is increasing. Sorry, asset value is decreasing. Book value 60,000. Revised value 50,000. So asset value is decreasing. So it's a loss. Decrease in sundry debtors, debit side of revaluation account. Then trade creditors. Trade creditor is a liability and liability value is decreasing. As liability value decreasing, it is a profit. Credit side of revaluation. Now we need to find out the net effect. How to find out the net effect? 3,000 credit balance plus 10,000 credit balance plus 10,000 credit balance. Okay, that comes 13,000, 10,000, 13,000, no, 23,000, is it? 10,000, 10,000, 3,000. Yeah, 23,000. Now debit balance 10,000, 5,000 and 4,000. 15,400. So 23,000 minus 15,400, 7,600. As credit balance is more, we got credit balance here. Okay. So now we got the amount to be adjusted between the partners, that is 7,600. Now we need to find out who is gaining and who is sacrificing. Okay, who all are the gaining partners and who all are the sacrificing partners. Next step we are going to do that. Now we need to find out the gaining ratio or sacrificing ratio. Old ratio of X, Y, Z is 5:3:2 and new ratio 4:3:3. Sacrificing ratio is equal to old minus new. Sacrificing or gaining ratio, old minus new. If it is a positive figure, it is sacrifice, and if it is a negative figure, it is a gain. So X share is equal to 5/10 minus 4/10. Okay, so it is 1/10 sacrifice for X, and for Y, here it is 3/10 divided by 3/10. There is no sacrifice, no gain, nil. There is no change in profit of Y. And for Z, here it is 2. 2/10 minus 3/10 minus 1/10. So that is a gain. So X is sacrificing 1/10 and Z is gaining 1/10, and there is no change in Y's share of profit. So now adjustment of revaluation of profit. We got 7,600 in the last step. Is it net effect of revaluation? We got 7,600 and 1/10 is the 10th portion is the amount to be adjusted. So X will be credited by 1/10. 7,600 into 1/10, 760. And for Z is the gaining partner. Z will be debited by 1/6, that is 760. Okay. Now we need to pass the journal entry. This is the journal entry. Date, particulars, ledger folio, debit, credit, format of journal. Then 2019 1st April. Z should be debited by 760. Is it? So Z's capital account debtor to X capital account. 760, 760. Adjustment of revaluation profit made. Okay. Here there is no role for Y, as Y is not gaining any profit and Y is not losing any profit. Adjustment is between Z and X. Okay. Hope it is clear.